Hello everybody, good morning, good afternoon and good evening. I wish you a very warm welcome here to ForTrade Weekly Webinar. I'm Max from Research Department at ForTrade Company. The purpose of this webinar is to help you better understand the upcoming French elections and possible implications on the financial markets. First of all, we're going to take a look at some basic facts, fundamentals regarding the country itself, and later on we're going to consider some possible scenarios that may occur and that may have some impact on financial markets. Before we start with our presentation, I would like to read for you this risk disclaimer, risk warning. Trading CFDs and other leveraged products carries a high level of risk to your capital as prices may move rapidly against you. Be aware you can lose all but not more than the balance of your trading account. These products may not be suitable for all clients, therefore ensure you understand the risks and seek independent advice. This material does not constitute an offer of or solicitation for a transaction in any financial instrument. ForTrade accepts no responsibility for any use that may be made of the information and for any consequences that result. No representation or warranty is given as to the accuracy or completeness of this information. Consequently, any person acting on it does so entirely at their own risk. Major tectonic and massive movements in world politics commenced last year as rising wrong, according to many populism, which heavily scares the financial markets, led the UK unexpectedly to decide to leave the European Union. It went on in the United States of America as expectations that Mr. Trump would win US presidential election against broadly favored Hillary Clinton were also lower. Does the French presidential election hold one last shock? That's kind of question that will be answered the next couple of weeks. On April the 23rd, 2017, French voters will be expected to participate in the first round of French presidential election. According to the analysts, these elections are to be like no other, as current President François Hollande has rejected to run for a second term, making history to be the first French president to do so. New standards are poised to be set as far-right candidate. Marine Le Pen gains considerable support to get through to the second round. It would not have been that weird had she not promised to take out France of the European Union. Marine Le Pen advocates unique France being no part of the European Union as she sees France better off out of it. Marine Le Pen promises to organize an independence referendum within the next 6 months from her election, an intention to remove the euro currency from the France's financial system, introducing back the franc. Skeptics go that far, believing that her being elected would mean beginning of the end of the European Union. Just for the record, France is one of the co-founders of the European Union and as such takes a very important place in the European Union. While Marine Le Pen is given the highest probability to win the first round, Emmanuel Macron, a centrist and independent candidate, is expected to easily win the second round of the French presidential election and to be promoted to next president of France. Emmanuel Macron sticks to pro-EU France and promises better France within the European Union. Macron, a pro-European former economy minister in Hollande's government, seeks to transcend the traditional left-right divide in French politics and boost economic recovery by reducing public spending and cutting taxes to help business innovate. Some analysis go that far, calling Emmanuel Macron savior of the European Union. The final vote whether France will be led by anti or pro-EU president will be probably made on May the 7th, 2017. If one recalls Brexit vote and US presidential election and their influence on the financial markets, he remembers too big price volatility in major instruments such as gold, pound, euro and the US dollar. Unlike other major elections in EU states, including those arriving before it in the Netherlands and after it in Germany, the French elections on April 23rd and possibly on May 7th features no single clear frontrunner. Indeed, making any concrete predictions about what the French political landscape might look like 12 months from now is next to impossible. It is often said that the markets hate uncertainty, which may go some way to explaining the poor performance of the French benchmark stock index CAC 40 at the outset of 2017. France's headline index dropped over the course of January as its European counterparts like the DAX and FTSE 100 grew. But the potential repercussions from this vote go far beyond the CAC 40 and far beyond Europe. If the French public used this election to make a statement against the euro and the European Union, the fallout could be serious and lasting. Moving on to the next slide, we are about to consider how will the French presidential election affect the euro. We will consider some European policy, France policy, and euro behavior over the past couple of months, and some issues that may occur due to French presidential elections. France, first of all, France is one of the largest and most significant economies in the European Union. As one of the founding members of the European Union, France is also a central player in European politics, strongly influencing the region's economic and social policy decisions. Given its significant weight, a change in the country's presidency in the 2017 election will no doubt have a strong impact on the euro, influencing whether it continues its long-running weakening trend or whether it stages a reversal toward greater strength in the coming years. Politically, France remains an important decision maker in Europe. The nation elects 74 of 751 seats in the European Parliament, or close to 10%. Some parliamentary decisions require a simple majority and others require an absolute majority. France has 29 of the 352 votes on the EU Council of Ministers, and 260 votes are needed on the Council for a majority. The Council of Ministers, whose members are appointed by the respective EU governments, shares legislative responsibility with members of Parliament who are elected directly by EU citizens. So the euro has moved on. The euro has moved weaker against the dollar in the recent years, as slowing activity in the eurozone has worked against the single European currency. Under the influence of austerity measures, the euro area has managed to reduce its budget deficit in the last 5 years to 2.1% from 3.7% of GDP. Despite this, at a long period of loose monetary policy at the European Central Bank, growth has remained pretty much tepid. With sluggish trade and incoming investment, the euro has made a dramatic decline, weakening from more than 1.30 to the dollar to near parity. The socialist administration in France has been perceived as ineffective in managing the economy. Growth in France has averaged less than 1% for much of the time since François Hollande was elected president in 2012. At the same time, French unemployment has run at over 10%. This compares to unemployment rates of around 4% in other major European economies such as the UK and Germany. So let's say a couple of words about the issues. Key issues in France's next election will be varied, including how to tackle the country's high unemployment rate, as well as the nation's relationship and the role within the European Union. Other matters include the strength of social support with the country's welfare system, immigration, defense, and industrial policy. Now, let us consider what would each candidate mean for the markets. 11 candidates have joined the race for the French presidency, and the campaign is now into its final stages ahead of the election on April the 23rd. There are 3 front-runners, and as none are likely to secure an outright majority, a runoff between the 2 candidates is now expected on May the 7th. For the first time in 15 years, the far-right National Front has a realistic chance of winning the race under Marine Le Pen. Centrist Emmanuel Macron is challenging her in the opinion polls after the centre-right Republican François Fillon was derailed by an investigation into misuse of public funds. Unpredictable though the French election may be, it looks likely that one of the following four parties will win on election day. We can now move individually to consider the four major candidates that are considered by the polls to win next French presidential elections. The first one is François Fillon. The party that backs him is Republicans, and possible impact it is expected to be on French stocks. At the moment, the precarious position of Fillon's candidacy after Penelope Gate means that the actual policy of the campaign are being pushed to the background. His economic program, though, is ambitious. He wants to cut the public sector severely, shifting power to the free market in a way no recent president has attempted. This could present a big win for French stocks, with substantially less regulation on how they operate. And if his plans come off as intended, it could provide a much-needed boost to the Eurozone's second biggest economy. Let us now consider what actually is part of his agenda. First in line is to cut 500 public sector jobs and scrap 35-hour workweek, to remove French wealth tax, strip jihadists returning from wars in Iraq or Syria of their French nationality, requiring parents entitled to social allowances to agree to a parental responsibility contract in order to tackle children's absenteeism, disrespectful regard of the values of the French Republic. Next candidate, Marine Le Pen, from the National Front. She's very likely to see her election to have a strong impact on the euro process and key indexes like CAC 40 France benchmarks index. In terms of market impact, it is difficult to look beyond the Pen's headline policies on France's membership of the European Monetary Union and the European Union itself. France leaving the euro would probably signal the death of the single currency, resulting in huge economic turmoil as 19 Eurozone states attempt to deal with the aftermath. An outspoken Eurosceptic taking charge of a major European economy would not look good for the short-term future of the Union, so any signs that Le Pen is edging closer to victory could make markets anxious. According to her agenda, she would negotiate with Brussels on a new European Union, followed of course by a referendum, automatic expulsion of illegal immigrants and cut legal immigration to 10,000 per year, close extremist mosques, and give priority to French nationals in social housing, to fix retirement age at 60 and ensure 35-hour work week. Moving on to the next candidate, Emmanuel Macron, who is supported by his own movement forward, and French stocks are very likely to be impacted by his being elected. France's former Minister of Economy under the Socialist Party, before he quit to launch his own centre-left movement, Macron could really present an outsider that the markets can get behind. After announcing his candidacy back in November, it took until the 2nd of March for Macron to commit to any real policies. He has promised to reform France's pensions program, to cut the corporation tax and invest up to 50 billion euros in public spending, but is far more vague about how those plans will be funded, foreseeing 60 billion euros raised through increased employment and greater efficiency. But what he wants? Well, as mentioned before, he plans public investment of up to 50 billion euros to cover job training, to exit from coal and shift to renewable energy, infrastructure and modernization. He would consider reimbursement of full cost of glasses, dentures and hearing aids. Cut corporation taxes and give more leeway for companies to renegotiate 35-hour week. To lower down jobless rate to 7%, now around 2.7% from current possibly around 9.7%. to ban mobile phone usage in schools for children under 15 years of age, and a 500 euro culture pass for 18-year-olds. Now we are about to take a look at the fourth candidate, Jean-Luc Mélenchon, who is to be supported by a submissive France, and French banks in particular are to be expected to be impacted by his being elected. After the unpopular premiership of François Hollande, few expected France to lurch further to the left, but the late surge of radical leftist Jean-Luc Mélenchon in the polls further proves just how unpredictable this election can be. His policies might spook the markets, having promised a top income tax rate of 100% and further reductions in the French workweek. But it is the possibility of a run-off between Mélenchon and Le Pen that will have French investors really worried. They may be on opposite sides of the political spectrum, but neither has any interest in maintaining the current economic status quo. Let's now consider what actually he wants to get, and is being part of his presidential agenda, his campaign actually. He wants to allow voting from age 16 and create a sixth republic to replace the existing presidential system, to ensure constituent assembly which would acquire greater powers, but to be voted in by proportional representation. Zero homelessness and full reimbursement for prescribed healthcare is also part of his agenda, and a recognized burnout as an occupational disease. Now let us take a look at the national polls, the most recent national polls. With the first round of the French presidential election less than a week away, market volatility is picking up, while the market remains wary of a strong showing by far-right candidate Marine Le Pen or far-left candidate Jean-Luc Mélenchon. Investors ultimately expect victory from one of the two center candidates. If we take a closer look at the national polls, you may see that Marine Le Pen, here in dark blue, is standing around 24%, as much as Emmanuel Macron. Basically, there's two most serious candidates to get through to the next round according to these polls. But what is really remarkable is Jean-Luc Mélenchon and his rise in percentage, in percentage. Since mid-March, it is gaining considerable momentum here, something that really speaks to the markets lately. But still, in case some of the centrists get through to the next round, that centrist is about to win, according to the polls, is about to win next presidential elections in France. There are two main indicators that investors should really consider in France's presidential election. The first one is debt costs. The cost of France's government has generally been close to that of Germany, reflecting their status as being among the safest sovereign debt to own. However, recently this relationship has begun to break down. Since late 2016, the yield that France pays on its 10-year bonds has risen sharply relative to Germany's. Recently, the spread between French and German 10-year yields was back near those highs after polling suggested a swing towards the left-wing candidate Jean-Luc Mélenchon. The spread between the two countries' 10-year bonds touched a 3-year low last month. Yields which move inversely to price, meaning investors are devaluing French debt. Much of the political risk is now priced in, and French banks in particular may be supporting government bond pricing by using the cheap funding that they get from the European Central Bank to buy up the bonds. So don't forget to follow this relationship between 10-year government bonds, bond yields that France used to pay with respect to Germany's 10-year government bond yield. Next, one relevant indicator to be followed by investors in France's presidential election is French bank stocks. So while investors really have been demanding greater returns to hold its government paper, France's banks have not followed suit. This trend is more frequently associated with peripheral European countries and can indicate that investors are steering clear of a politically charged situation. And European economists at JP Morgan, actually, they say that country was doing better in growth terms. This positive outlook may have helped support the stock market in the face of political uncertainty after trending downwards in the early weeks of 2017. Leading French bank stocks had recovered ground by the end of March before slipping back a little since then. They reflect a wider quietude among French equities. The CAC 40 is trading at around its highest for more than a year. So don't forget to follow French bank stocks too. Let us have a say something about Euro Japanese yen currency pair. Well, first of all, let me have a say on the euro against the dollar currency pair. Too many other factors are really influencing the euro against the dollar. Donald Trump is trying to talk down the dollar while Eurozone data are getting stronger, and the European Central Bank is trying to hose down tapering expectations for its monthly bond purchases. It's really something that nobody can predict where actually this currency pair could end up. But investors have turned to the euro's value against the favored haven currency, the yen actually, to hedge French election risks. Since mid-March, it has fallen more than 6% and has broken below 116 yen per 1 euro actually. Further, Le Pen or Mélenchon gains would see a general sell-off in the euro by as much as 6% after the first round. That's according to Nomura Investment Bank. But even if they fail to break through, investors should not lose sight of the problems of governing for a centrist president when the combined support for Le Pen and Mélenchon is running at over 40%. There are ample reasons to doubt France's willingness and capacity to reform. Many analysts would agree on that. So here is the end of our presentation, but now we are about to move on to our live chat platform, a part that includes considering some scenarios and where certain instrument may end up after the after the France presidential elections. First of all, let me consider this interesting instrument, actually currency pair, euro dollar. As you can see here, starting mid 2016 all the way up to the beginning of 2017, the euro dollar was in a very strong, had been actually in very a strong downtrend, and since the beginning of 2017 has possibly managed to recover some of these losses, and according to Fibonacci indicator, it has managed up to now to recover 38.2% of that downtrend. Now, I've the 38.2 actually that represents 1.0729 euro dollar exchange rate could be considered as a pivot point. So basically everything above it would suggest bullish outlook, and everything below that would suggest bearish outlook. But let us now, as we mentioned in our presentation before, if Marine Le Pen, one of the anti-EU candidates that has really serious chances to win this year's France presidential elections, if she wins, she basically, according to the financial markets, she's not very much favored by the investors, because she wants to introduce France franc back to France financial system, and to basically scrap the euro currency from the financial system, France's domestic financial system. That's really something that would be very bad for the European, for the Eurozone, for the European Union, for the European Monetary Union. These kind of uncertainties are about to bring down the value of the euro currency. So basically, if that's the pivot line, if that if the elections were to be held today and Marine Le Pen won, then one may expect, according to Fibonacci indicator, the euro dollar to go down all the way. The first target to be 23.6% of Fibonacci level, which represents 1.0579. The rate of 1.0579, and the second target may be really far beyond 23.66 or may go all the way down to a Fibonacci level of 0.0%, which represents 1.03386 exchange rate, which basically hasn't been seen in quite a long time, since 2002. So really, as you can see, and as you may have realized, these elections are quite important, and these elections are to bring in increased volatility as far as this instrument is, the currency pair is considered. But let us now consider if what may happen if Macron wins, which is really considered by the polls to be the one serious favorite, or one another serious favorite candidate to win France's presidential elections. So he's basically, as we said before, his policy is to stick to the European Union. He's not about to change massively the France policy within the European Union. Basically, this is to calm down the markets, and that would really give, will cool off all this current uncertainty or bounding about at the moment, and investors may embark into buying actually the euro currency, which demand basically may lead to higher euro dollar currency rate. The first target, according to Fibonacci level, is 50% Fibonacci level actually, which represents 1.08512 exchange rate, which is quite last time hit in late March. But the second target that's is suggested by Fibonacci indicator is 1.09734, and is stands which is represented actually by 61.8% Fibonacci level, which was last time seen back in 2016 when the U.S. presidential elections were held, and when Donald Trump won actually the U.S. presidential elections. Now, if we really go back to some similar events that have recently taken place actually, like Brexit vote and U.S. presidential elections, we may really get assured that a big volatility is ahead of us. Now, so this is the moment when Brexit was voted. See, here we have 24th of June when the results came out, and was showing that majority of Britons want to leave the European Union. It was really very negative. Was considered very negative by the financial markets. So the euro actually dropped from 1.13 to all the way down to 1.09. So it was a huge volatility because of Brexit, and something similar, like maybe really compared to Le Pen's victory. If she wins, basically we may really see such big volatility too. And here we see U.S. presidential elections. When Donald Trump won the U.S. presidential elections, which also initially was not really very much favored by financial markets, although after a while turned out to be favored by the financial markets. Here we are seeing this heightened volatility. You see, initially it went up first from 1.10146 all the way up to 1.1294, and this is as I said before, afterwards went all the way down, but this is volatility that happened in one day, up and down, and some similar scenario really may be expected after the French presidential elections. So that this, and we may expect if really Le Pen wins, really that is could will support our scenario of euro dollar going all the way down to 1.3386 if Le Pen wins. Another instrument that is really expected to get impacted actually by France's presidential elections is gold. Once again, if we take a look at the Brexit vote that day when Brexit was voted in Great Britain back in 2016, we see that heightened volatility. So because uncertainties were really going around, and the investors started to buy into safe haven instruments like gold, and on this particular day, gold prices went up from 1266 to 1358.55. That's an unusual and abnormal one-day return, which is really caused by unusual events like Brexit vote, like US presidential elections, and the very same scenario might be expected as far as volatility is concerned, might be expected after the France's presidential elections. The same story is, as I mentioned before, the US presidential elections. You see here, first it went up from 1278 all the way up to 1336 or something, but then afterwards it started to dip, basically because of some other factors, because his policies had started actually, but they were considered positive by the investors. So what actually Fibonacci is suggesting us that we have a pivot line around 61.8% Fibonacci level, which is suggesting price of 1275.55, right? So we know that gold is very sensitive to ongoing uncertainties, and basically when these uncertainties are growing, investors are buying into safe haven instruments, and is pushing demand for these instruments up, which consequently is pushing up the prices. So gold, if Le Pen is considered to be negative scenario, Le Pen's win actually is considered to be a negative scenario according to the markets, and consequently, if she wins, it is reasonable to expect gold prices to go up. So according to Fibonacci indicator, first target is 76.4%, which represents a price of 1311. A second target is 88.6%, which represents a price of 1341, and the third target, if happens at all, might be 100%. That's 16's peak of around 1370. So this is one possible scenario if Marine Le Pen wins. But what if one of the centrists wins, like Emmanuel Macron, who's basically favored by the financial markets? Well, of course, that some of the ongoing sentences are going to be certainly annulled, and investors are going to really dump out safe haven instruments like golds, and that is going to consequently lower down demand for gold, and consequently the prices of gold are going to go down. So the first target, according to Fibonacci indicator, is 50% Fibonacci level, which represents a price of 1246.44. Second target is 38.2, which is still slightly above 1200. And if at all happens, at all, 23.6 represents the third target if Macron wins or another centrist wins, which represents a price of 1181.19. Now, I would like to also consider Euro Japanese yen. That currency pair has been lately very compelling, as Japanese yen was really growing in value due to the global uncertainties related to North Korea, related to Syria, and straining the relationship between Russia and the United States of America. So you see here that downtrend, quite steep downtrend, that's due to increasing Japanese yen as Japanese yen, and the Japanese yen is considered as a safe haven currency across the world. Now, it has started to recover a bit, as also all these uncertainties as far as North Korea and Syria are kind of cooling off and giving some room for that currency pair to go to recover a bit. And as you can see, the charts here has already passed a 23.6% Fibonacci level, and is targeting possibly 38.2. So that would be a 38.2% recovery from this downtrend. Now, if we now consider Marine Le Pen wins, if we take that scenario into consideration, what would that mean for the Euro-Japanese yen currency pair? Of course, as we said before, this is a negative scenario considered, so the euro will be expected to go really down. On the other hand, as uncertainties are piling up, Japanese yen is about to go as itself is considered to be safe haven currency. So if we consider current price, current level actually 117 to be the pivot level. So the first, according to Fibonacci indicator, if Marine Le Pen wins, first target is of course 23.6 according to Fibonacci level, indicator, 23.6% Fibonacci level, which represents a rate of 116.72. Second target, which is very likely to occur, is 114.83, which is represented by Fibonacci level of 0.0%. If we really consider this as a strong support line, medium to longer term strong support line, also in our case may be considered to be reached as a direct consequence of Marine Le Pen's victory. So that might be considered to be target 3. But what if Macron or Fillon, one of those two centrists, win the French presidential elections? Well, this is certainly to be taken positive by financial markets. Euro will be favored, uncertainties are about to go down, and demand for Japanese yen to go down as well. So that would push Euro Japanese yen currency pair higher up. And a first target is 38.2%, which represents a rate of 117.92. Second target is 118.88, and third target, represented by Fibonacci level of 61.8%, is 119.76. So that would conclude our webinar, and I would like to really thank you for your time and the fact that you have appeared to be in such a big number, and I wish you all the best, a lot in your trading, hoping that you will soon materialize all of these, at least part of these trading opportunities. I wish you good day, I wish you good evening, good morning, and have a nice rest of the week. Bye now.